Welcome to this week's look at the state of the New York City real estate market. Wow, it is March already. This report is for the week of March 2nd through the 8th. We'll get started right now. We're going to be talking about what is happening in the New York City real estate market as we head right into the spring market. We're going to be looking at the luxury market, the Manhattan and the Brooklyn markets. We're going to be talking about mortgage rates. We're going to be talking about strategies to help you be successful in this market if you are an active buyer or seller. We'll get started right now with the luxury market. Big activity going on there. 43 contracts signed last week. That is 11 more than the previous week. Wow. Luxury market here continues to be so strong. The number one contract was 53 N at 50 West 66th Street. It was asking $35 million. This is a new condo with almost 4,900 square feet. It includes 4 bedrooms, 5.5 bathrooms, 2 loges that total 286 square feet. It has a 27 by 41 foot great room with 14.5 foot ceilings that opens onto a loggia overlooking Central Park. The amenities in this 39-story, 121 unit condo building include doorman, fitness center, indoor lap pool, outdoor saltwater pool and jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and my favorite, dog washing facility. 87 units have closed so far, averaging just over 3,700 a square foot. The number 2 contract was unit 2803, 2805 at 303 Park Avenue, asking just under $30 million. The Waldorf Towers condo has 4,717 square feet, includes 5 bedrooms, 7 bathrooms, and a terrace that totals 1,339 square feet. It's a combination of 2 units that are being put together by the developer. A little bit more about the Waldorf Tower condo. It has 372 units with its own private entrance, staff being concierge, doorman, and valet, and 50,000 square feet of dedicated amenities on the 25th to 27th floors that are separate from the hotel. The hotel having 375 guest rooms and its own amenities. This condo offers a fitness center, a spa, 25-meter pool, terrace with 2 outdoor kitchens, private dining room, game room, children's playroom, and a stage and screen theater. Valet parking and 24-hour room service are available from the hotel, and 54 out of the 372 units have closed, averaging just under 3,300 a square foot. The total weekly asking price sales volume for last week, 421,529,000. Average asking price, 9,803,000. Median asking price, 5,999,000. Average discount from original ask to last asking price, 9%. And the average days on the market, 408. Well, as I said, very strong showing in the luxury market. Let's see if that continues as we move further into the real heart of the spring market. So while Manhattan supply ticked a little higher last week, it still remains about 7% below last year. So we're seeing really tight inventory as we head into the full spring market. Demand does seem to be improving. Signed contracts rising sharply, roughly in line with last year, though the deal activity in the market remains on the lower end since the mortgage rates rose. So looking at the numbers for Manhattan, the supply for the week, 404, that is up almost 53%. Contract signed, 240, that's up not even 1%. Off market, 143, that is up 88%. The supply for the month, 1,271, that's up a little over 4%. Contract signed, 955, up 40%. Off market, 434, that is up just under 1%. So interesting, big jump in those weekly numbers for things like off market properties. But for the month, not really seeing that kind of jump. Be interesting to see what will happen in these coming weeks. In this market pulse, you'll see we remain in a fairly neutral market. And from the Liquidity Pace chart, we see 955 contracts signed over the last 30 days. That is up a little over 37% from last month, still a little down from last year. The Brooklyn supply is rising, albeit slowly. It remains tight going into this spring market. The demand softened slightly. Contract activity down over the week, about 6% down from last year. The next few weeks should be quite telling. Looking at those numbers for Brooklyn, the supply for the week, 218. That rose about 33%. Contract signed, 108. That is down almost 25% off market. 88 properties came off the market. That is up almost 55%. The supply for the month, 780. That is up almost 15%. Contract signed rose also about 31%, 520. Off market properties for the month rose almost 27% at 258. This market pulse in Brooklyn is showing that while we're in a neutral market, it's falling more, let's say, to favor the buyers, not by much, so we'll have to keep an eye on that. And the Liquidity Pace chart, contracts signed over the last 30 days, 520, that's up almost 28% from last month, down almost 10% from last year. So to recap, again, luxury market just continues to be so strong. 43 contracts signed, that's 11 more than the previous week. 23 of those were condos, 15 were co-ops, and 5 were townhouses. The supply in Manhattan and Brooklyn, in Manhattan, 5,484 in total. In Brooklyn, 2,998. We definitely are tight on inventory. Pending sales, 2,889 for Manhattan, 1,673 for Brooklyn. And the off-market properties saw that number jump for both Manhattan and Brooklyn. Not sure what that means, but we'll see in the coming weeks. Manhattan, 4,122. Brooklyn, 2,061. Average days on the market, 88 for Manhattan, 80 for Brooklyn. So we're seeing a little bit of a rise in average days on the market for a property come on the market and then sell. So definitely want to be aware of that. If you are a seller, just be mindful that those days on the market seems to be a little bit on the rise in both Manhattan and Brooklyn. The mortgage rates rose a little bit last week. 30-year conforming, just right around 6.04%. 30-year jumbo also rose 6.29%. Let's talk a little bit of kind of macroeconomic news just for a moment, because it is having an impact, seems to be having an impact. We don't know how much it will have, but clearly not in the luxury market, but perhaps with mere mortals, it is having more of an impact. The credit spreads continue to widen as the geopolitical uncertainty lingers in the Middle East. Markets were already reeling from a reset in the software sector. So the question now is whether this kind of risk-off moment in time hits the credit markets and the equity markets as our spring cycle is really set here to kick in. Spring market really kicking in historically here, starting about mid-March. So we're really kind of right there. So let's see what happens with that. If you are active in this market as a buyer or a seller, here are some things that will help you be successful. For sellers, you really want to take advantage of this low inventory environment. To do that, be sure you position yourself to the best of your ability to be kind of best in your class, which also includes making sure that your asking price is compelling to the buyers in this market. There are 3 ways to price a property, and it is always determined by market conditions. So you price for the market, because remember, asking price is not necessarily your selling price. It is part of your strategy. What does that mean? Well, if it is a kind of neutral market, which we are in now, you want to be sure that you're kind of pricing in alignment with the market. If it were a seller's market, you could be ambitious in your asking price. This is not a seller's market. If it were a true buyer's market, you would want to be pricing just under where the market seems to be. In New York City, it's always very hard to know exactly. We're very different than other markets because our data is delayed by about 3 months. So it is very difficult to 100% know exactly where the market is because we get that delayed information. But overall, I think you get the idea, right? This is a neutral market. Price for the market. Do not be too ambitious about your asking price. If you really want to move it fast, slightly underprice it, it will move quickly. And the sooner it sells, the more money you make. So you could do that. Those are 2 ways you could price for this market and be successful. If you're a buyer, the rates are kind of fluctuating a little bit overall. They're down. Take advantage. If you're financing, if the rates work for you, take advantage. If you're looking for leverage, look to those properties that have been sitting on the market. Maybe you had a price reduction or 2. That's where you will get the most play, right, in your negotiations. The newer properties will likely be, those owners will likely be less negotiable. And you may have more competition with other buyers who are also looking for their new home. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, you can always reach out to me directly at Sotheby's. You can email me, you can call me, you can post your comments below. I'm always happy to help you with your real estate puzzles and problems. I'll be back next week. In the meantime, take care.